What if I told you that Japan and South Korea, two nations with more diplomatic friction than a TikTok dance-off, just teamed up to save their currencies? This isn't some wild conspiracy theory. Reuters is reporting that both countries, possibly with US backing, secretly intervened in forex markets to prop up the yen and won. And here's the kicker. This move came as the yen was flirting with 40-year lows, while the won was limping along at 9-month lows. Let me tell you, this feels like watching two rivals in a sports league suddenly join forces to beat a common enemy. But why would they do it? And what does it say about global finance today? Let's unpack this. The yen has been on a rollercoaster ride for years. The Bank of Japan's ultra-loose monetary policy, basically printing money like it's going out of style, has kept interest rates near zero for over a decade. That's not just bad for savers, it's created a massive gap between Japanese and US bond yields. Think of it like this: if you're an investor, why park your cash in Japan when you can get better returns elsewhere? The result? A yen that's been losing value like a sinking ship. But now, Japan's suddenly flexing its financial muscles. Why? Well, maybe they're tired of watching their currency become a punchline in global markets. Or maybe they're signaling to the world that they're not just a passive player anymore. And then there's South Korea. You might not think of them as a forex powerhouse, but their move to sell dollars and buy won is a big deal. The won jumped 2% in one day, its highest in 9 months. That's not just a technical fix, it's a statement. South Korea's economy is heavily reliant on exports, and a weak won makes their goods cheaper abroad. But if the won gets too strong, it could hurt their competitiveness. So this intervention isn't just about saving face, it's about economic survival. What's fascinating is that both countries are doing this at the same time. It's like they're saying, we are not alone in this. But why now? Is this a response to US pressure? Or is it a coordinated move to counteract the Federal Reserve's rate cuts? The timing feels too precise to be a coincidence. Here's what really gets me: the US is supposedly involved. If Reuters is right, the Fed might have conducted rate checks during this intervention. That's a huge deal. The US has always been the ultimate forex arbiter, but seeing them collaborate with Japan and South Korea? It's like watching the three musketeers of central banking. But why would the US even care? Maybe they're trying to stabilize global markets ahead of a potential crisis. Or maybe they're testing the waters for future interventions. Either way, this signals a shift in how major economies are handling currency wars. Let's step back. The yen's been a safe haven currency for decades. People flock to it during crises because Japan is seen as stable. But if the yen is weak, that stability is under threat. This intervention might be a way to restore confidence, not just in the currency, but in Japan's economic leadership. And if Japan can stabilize the yen, it could ripple through global markets. Imagine a world where Japan isn't just a borrower of last resort but a player in shaping forex trends. It's a bold move, and I'm curious to see how it plays out. Will this be a one-off, or is this the start of a new era in currency cooperation? One thing's for sure, the financial world just got a lot more interesting.